Hi, everybody. Super excited to chat with you today with Bjorn. My name is Sherry, and I'm the co founder of Peak. And I do a couple of these series and talks with people that I think are very interesting. And Bjorn is certainly one of them. He is the founder of actually a few different companies, and he also does a lot of his own private investments as well into different startups. And so, wanted to hear him share a little bit more about his learnings and his journey. Hi, Bjorn. How are you?
Hey, I'm really good. Thanks so much for having me on. How are you?
I'm doing great as well. I can't really complain. Just keeping busy in the startup world, but you know how that's like. Yeah.
For sure.
Um, cool. So for those who are obviously new to you, would you mind doing just a quick introduction on yourself, your background?
Sure, absolutely. So essentially, for pretty much all my career, I've been moving between investments and startups. So did a few years in management consulting, but apart from that, I've been mainly moving between VC, angel investing, and operating and founding startups. So yeah, it's been the past 10, 15 years. That's pretty much all I've been focusing on. And I've been both on the operational side as part of a couple of consumer brands. So essentially operated a consumer brand where I ran the growth, expansion, tech and product for an online fashion brand that we scaled from zero to about 200 million in revenue over 5 years. And also most recently founded a house of brands in the eyewear space. And before that, I was on the VC side, doing investments mainly in Series A and Series B businesses, working with really, really great founders all across.
Yeah, and I think what's really interesting in your background is you have both the operator as well as the investor hat. So you can both evaluate investments from the financial perspective because you've seen like how a portfolio company ends up doing, but then you also know the details behind, how you can run go to market strategies to grow companies, perhaps even be able to like identify the human elements of things a little bit more just because you've worked on teams with people before. So actually one question I just want to kickstart, just because I always found it really interesting when I first started talking to you, is how did you actually get into eyewear, because it's a very specific segment within the consumer space.
Yeah, super, super specific, but really, really interesting market. So essentially, I had just been, 4 years in online fashion, and I pretty much the only thing I knew for my next venture was that it would not be in online fashion, because I was sick and tired of it. And essentially, then I started researching so many different consumer verticals, but eventually got introduced to a founder in the eyewear space and started talking. And the more I looked into eyewear, the more fascinated I was by the market, both by the business model, but also how kind of stuck in its old ways that the market is still today. Very, very offline, very, very old school. So there are so many opportunities to innovate. But also, I did like the part of doing good as well, because eyewear is still, at the end of the day, like most of the market in eyewear is still prescription eyewear, and that is still about making sure that people get access to proper eyesight, which you definitely shouldn't take for given today. And unfortunately, it is an issue that just keeps on growing and growing and growing. So yeah, it's definitely an interesting problem to tackle, and an industry that is just fascinating in so many ways.
Yeah, absolutely. Would you ever go back into online fashion or eyewear again, or that's something that's in the past?
I mean, you should never say never, right? I think I would at least know a ton of things about those verticals, so at least I know what to avoid. I think we definitely saw all the things that you shouldn't do, so that helps for sure. But yeah, let's see. I'm working on a new venture, as you know, and I can say that those will not be the immediate verticals we're going after, but maybe one day.
Yeah, no, and that's super exciting, and congratulations on the new venture as well. I know sometimes it's like once you're a entrepreneur, you're always an entrepreneur. You give yourself a little bit of time, a breathing room, but you just like can't wait to get back in the game, right?
Yeah, for sure. It was, yeah, I tried to take some time off, and I did over the summer, but then I just got too restless. Just kept on getting new ideas popping into my mind, and kept on talking to people doing really interesting stuff. So I just wanted to get back to it. So yeah, here we are. I'm building again.
Yeah, for sure. Well, excited to see what is going to come to fruition in the next couple of months. Let's actually talk a little bit more about your investments, actually, especially in the early stage startup space. So you've actually invested in very interesting companies like SpaceX, Klarna, and even Anthropic. So first of all, very very cool. But how did you actually end up getting into some of these deals that are actually super hot and growing companies right now?
So those, I guess you can't really qualify those as, early stage or angel
Yeah.
deals anymore. It's more like pre-IPO. So for me, I didn't get in very early. So for me, it was more about finding these really cool companies that I want to back and that I also see have a really, really ambitious vision and where I see that they can just potentially keep on growing for decades. I think especially SpaceX. I mean, who out there has never dreamt about space, right? Like that's the final frontier, and it's such a cool vision and mission that they have. So I just want to be part of that story, and I started looking into ways of potentially getting into SpaceX, and then eventually got in via an SPV. So that was how that came to fruition, and pretty much the same thing with Klarna and Anthropic and those kind of deals. I've been following those companies. I see that they are building something really really cool, and it's more that the sky is the limit. They are so ambitious when it comes to what they are trying to achieve. So for me, it's kind of a no-brainer to just try to get in.
Yeah. For Anthropic, how early did you actually, or I guess like at what point were you able to actually privately invest in them?
Oh, not early enough. I wish. No, it was only, I don't know, maybe 10 months ago or something, maybe a year. I don't remember exactly, but nowhere near early enough. But still very excited and hopeful for the rest of their journey.
Yeah, I mean, we say not early enough, but in 10 years, I bet people investing in Anthropic will definitely see your investment as early because there's just so much more that AI, obviously, and large language models have to grow. And are you right now a user of Claude more than ChatGPT, maybe? Or
Yes,
equally?
I do use both. Well, pretty much. I think most of us kind of use, different tools for different things and typically stack them up. So I use them for different things. But yeah, I'm definitely a heavy cloud user.
Yeah, I love Claude too. I think one of the things that I love about it is it's actually very good at coding, and it's allowed people like me who are non-technical to be able to actually create apps just by using natural language, right? And yeah, Claude's been great for that.
Yeah, and I
Um,
remember you talking about the prompt, like the prompt guiding as well in Claude, which is something that's been really cool about their product.
Yeah, the prompt guiding's great. They've also, improved the artifacts component, so you can actually not only see like UI essentially being generated on the
Yeah.
spot, you can actually see the underlying code, which is pretty cool. So I'm obviously a big fan. So I think it's a good decision that you made there. And with private investments, they're illiquid in nature, which means it's a lot harder to kind of get in and out of it. You're looking at a longer time frame for an exit, right? So how do you think about like how much you want to put into illiquid versus liquid investments within your own portfolio, or is it a bit more opportunistic, right? You're like, okay, like I just want to get in this now, this is the allocation required, I'm just gonna full send and go for it.
Yeah, I kind of have this rational rule of thumb, and then I talk to someone, and then I just get too excited and immediately break it. So that's my issue. No, I think it's I kind of divide angel investments into two different types, right? With the kind of SpaceX, etc. They to me are more like pre-IPO investments.
Yeah. Yeah.
So for me, it's more like I should be able to see a liquidity event within the next few years. And I don't really see that they would go to zero. If they did, I think that would be, it would not be too expected at least.
Yeah.
Whereas for my angel investments, there it's more like I pretty much write them off, at least mentally, the moment I wire the money. Because there it can take, 10, 15 years until a liquidity event. And, it's a very high risk that they go to zero, and you have to be okay with that. So I think I kind of divide it into different buckets. I have the public market buckets, which is of course you can sell anytime, and then I have the more pre-IPO, which is sure it's locked in, but at least it's not as risky. And then you have the angel investments, which are super super risky, and there it's like don't put anything into angel investments that you're not prepared to lose.
Yeah, absolutely. And I'm just curious to hear your thoughts here, but would you say that like you see like betting in pre-IPO companies somewhat similar in like risk and liquidity profile as like investing in individual stocks that are liquid, or would you put that as, way more kind of illiquid and risky? Because a lot of times I would say when you hear about people buying like certain stocks, right? I mean, for my case, like one that I invest in that I quite follow, like following is Palantir. I do not plan on selling that for many many years, right? And so, is that kind of how you think about it? And do you then avoid investing in individual stocks as much because you're focusing on like the pre-IPO bucket, or do you do a little bit of both, right? I'm kind of curious how you think about it.
Yeah, I still do a little bit of both. I know that I shouldn't, but sometimes, just like you, I just get too excited about a stock. I mean, I do still have like the bulk of my public markets investing is still ETFs, like low cost index funds. But I still do some stock picking, even though I probably shouldn't. But I do kind of see them the same way as I do pre-IPO, because of course it really depends on the type of stock. But I do tend to hold for a very long time. So I do try, like I don't do any day trading.
Yeah.
If it's a stock that I want to exit within like 3 to 6 months, I don't think it really makes
Yeah.
sense, or at least that's not my style of investing. So I do more thematic investing and more like try to go deep on one company.
Yeah. And do you have any rules that you like set yourself in terms of allocation to some of your individual bets as well? Like, I mean, I know some people who are like, you know what, I'm 33% in Nvidia. I bought it early and I'm okay with that being the case because I believe it has more to grow. You have other people who are a bit more, maybe I shouldn't have more than 10% in a single holding. So how do you think about that for yourself, right? Do you kind of have a rough allocation that you think of for your individual bets?
Yeah, I kind of have like a rough mental model, but I don't have like a super, super structured way. I would say that Peak has, of course, helped me a lot in just like visualizing that. So definitely a good use case for the product. But I would say that like for angel investments, there it's much harder because there it's sometimes you have like specific tickets, so you can't really negotiate much. It's like take it or leave it. Either it's
Right.
25K or 50K or 10K, whatever it may be. And it's also you can't really control the liquidity events. So it's not like you can be okay, I'm gonna exit in 2 years or 3 years. It's more opportunistic in that sense. You never know when the next liquidity event is gonna be. So then I try to just stay pretty close to the company so that when a potential liquidity event is there, then I already know if I want to double down or if I want to sell.
Yeah. Yeah, absolutely. And speaking of angel investments, let's maybe go into the early stage part just a little bit more. Could you talk about perhaps some of the more interesting companies that you've invested in at the early stage, and what made you decide to invest in it? Was it like, you know what, I am very bullish on this market segment, or were you like, you know what, this founder is just somebody that I would not be able to go to sleep at night thinking I didn't back them? Like, what was that?
Yeah, I think for the earliest stages, for me, it's all about the founders. Of course, I have to like the market as well. I have to like the opportunity. But since I try to invest super early, it's typically uh, a pretty high probability of them pivoting a few times. Maybe not the entire idea or the entire market, but like definitely tweaking. So it's more about, okay, what kind of founder is this? Is this someone I want to back? And yeah, like one example would be Lassie, for example, which is a pet insurance startup out of Sweden. And there I was actually a coach at my former business school at the accelerator there. So this founder, Hedda, she was part of that accelerator batch. And she was still working full time, so she was doing this on nights and weekends, and hadn't even quit her company yet. And essentially, I saw that she alone, this was before she got her co-founders on board, she alone would be able to deliver like each week, just like set up targets and then come back the next week. And she had already like done all of them and done a few more things. And she just produced more results than pretty much the rest of the batch combined. So when the batch was over, I just told her straight away that whenever you're actually setting up the company, and whenever you're doing a round, I'm definitely in. And yeah, that's so far paid off, but you never know. The journey is long. But now they raised a Series B a little while ago from a really good investor, and things are looking really good. So
That's
of
awesome.
course that's of course the best case. But then I've obviously invested in startups that have not performed as well, and that's okay too.
Yeah. And did you notice any difference between, the founder of Lassie and like what made her and the company successful, and what were and what's the difference between her and the ones that didn't, or is it just kind of luck and variance at play a lot of the time?
I mean, I do think it's luck for sure, but then of course how much I'm not sure. I think the what you could spot already early on was the kind of hunger, ambition, but also consistency. Because a lot of founders are good at talking, but when it comes to actually achieving results and doing it consistently, that's a lot harder, right? So that's always what I was most impressed about. People who could both sell the vision, but also in the day to day just grind, and get results.
Yeah, there's a saying. I think actually Sam Altman talked about this as well. But like the key to like doing really well is like find a way to like improve 1% every
Yeah,
single day. If you do not know what that 1% is for yourself or the company, then you're not growing enough. But you need to identify like how you're doing it consistently versus, you know, kind of like waiting for luck to be a driving force there.
exactly. No, I couldn't agree more.
Yeah, and when it comes to like doing your angel investments, do you have like a set number that you think other people should consider when managing their own portfolio? And I know everybody's different here, but if you do it, you might want to do more than just one. But some people are, as I guess they're in the upwards of like doing 50, which obviously is not for everybody, but like, how many did you decide that you can mentally, keep up with as an angel investor?
I think it's really up to everyone to see what they feel comfortable with, what kind of target they have. Like, is it purely financial, or is it about learning, or is it about networking? Like, you can have a bunch of because if you just invest in a stock on the public market, that's most likely purely financial, right? But you can do angel investments for a bunch of different reasons. So I think it really depends on that. I think, of course, if it's purely financial and you don't like want to spend too much time on each company, then it probably makes sense to try to get in early in a bunch of different companies and get like a portfolio going. But if you actually do want to spend time with the companies, and also if you want to make sure that you understand the industry, etc., then it will be really hard to have a massive portfolio. And for me, I guess I'm a little bit undecided because now I'm also building this new thing. So I don't want to get, I'm not going to do this full time. So I am mindful and like trying to not spray and pray too much, but rather taking some pretty considered bets, but more focused bets.
Yeah, for sure. And have you ever thought about like LPing into a fund instead of like doing your own investments? Or sometimes you can invest at like a syndicate level. So like you have like people kind of pull together, and then the investments are kind of made collectively into a few different companies. So have you done those or thought about doing those, or you're like, you know what, I kind of want to do things the Bjorn way?
Exactly. No, I've been looking at some LP investments, but in the end, I always prefer to just like actually pick myself, because to me, like investing as an LP, at least at this stage, I might do it later, but at this stage, that's kind of like investing in an ETF. So I feel like then it's more fun to go direct. I am part of a couple of syndicates because then you can still, yourself evaluate each deal. And I think that's what I want to do, because I guess the learning for me, like the one investment that did not go very well for me, that was when I kind of just piggybacked on some VCs and didn't do any due diligence myself, and I couldn't really follow my own gut. I just said like, okay, I guess you guys have evaluated, I don't have time, so let's just go. So I do want to like get that personal connection, be able
Yeah.
to do the analysis myself. So yeah, I think being part of a syndicate is good because then you can still look at each deal individually, but of course getting the power of being in a
Yeah.
bigger syndicate.
Yeah. So would you say you prefer to be passive with your passive investments, which are basically your ETFs, etc., and then prefer to be more active with your active investments? So I guess if passive with active investment would be almost like, I guess outsourcing due diligence for early stage startups through a fund or something like that.
No, exactly. I think that's it. And I think it's like I'm not saying that anything is good or bad. I think it's more my personal preference and of course my background in VC. It just means that, I like it and I've done it a
Yeah.
ton of times, so I think I can do it fairly quickly, and
Yeah.
yeah, I just find it really fun. And also, I mean, I love talking to other founders and just seeing, what they're up to, what they're building, what kind of challenges they face, and what kind of opportunities they see. So for me, yeah, it's part of the fun.
Yeah, for sure. And I can tell other people that I think you were one of the first people that actually signed up for the wait list for Peak. Actually, even before I think we had an official wait list, because I just posted on LinkedIn, like, hey, if anyone's interested, like, DM me. And I think you did DM me. And then later on, I
Yeah.
was like, okay, we're getting too many messages, so we're gonna organize this on like a actual form now. But I think you were probably one of the first five people. But I loved how you were like, you know what? It's not just like, hey, this is a problem that I've been looking for to solve, but you were kind of interested in the space more broadly, and just again getting to know something at a very early stage. So
Yeah, I mean,
yeah.
I just loved what you were building, and I loved your energy and like how you approached it. So I was like, okay, this is super interesting. I want to know more.
Yeah, for sure. Now, last question I'm just going to ask you is, you are just like me, taking a lot of risk with your career, right? Starting something new. And even if you've done it before, and even if you've been through the VC and the operating side, like it's still a lot riskier in terms of, success outcomes than, doing a salary job somewhere, right? So you're taking risk there, and it also feels like in your investments, there's also some risk that you take as well. So I was wondering like how you think about risk management for yourself, and how did you kind of decide on what works for you? Because if you talk to like a generic financial advisor, right? Like a lot of them will probably look at like people like you and me and be like, yeah, like you may want to be a bit more conservative, right? But, I also look at that and I'm like, you know what? I want to do what works for me. So how do you think about risk management and, maybe risk tolerance, right? Is the better term there. Like what's that for you?
Yeah, I mean, I think I see my investments, like my angel investments, I see them not only as financial investments, but also investments in my career. So I think
Yeah.
that's the way I look at it. You know, like other people might sign up for courses and other things, but I see this as, it's part financial, but also part it's, personal growth, career growth, etc. So that's why I'm pretty okay with that risk, and that's why I'm also like, okay, I'm just gonna mentally write off any angel investment I make, because if it goes to zero, I think I still got value out of it. If nothing else, it will hopefully be some valuable lesson in there that I can avoid in the future. So essentially, that's how I see it. But then, of course, it's not like I go 100% all into super risky startup investments. I do also have like an apartment that I own, and I do have, public market ETFs, etc. So I do make sure I manage the risk a little bit. Probably not as much as any sane financial advisor would say, but I mean, and again, like that is something where I've really valued having a good overview, because you might like mentally think you're balanced enough, but seeing it kind of black on white on a dashboard really helps, because then you might be like, okay, now I really should pull back on this and this, or I should reallocate something into this. So that has helped for sure.
Yeah. Awesome. Well, thank you so much for your time and sharing your journey as a founder, as a VC, as well as an angel investor. I really look forward to seeing more developments on what you're working on, and maybe at a future podcast session we'll talk about that once there's more detail. But Bjorn, as always, really enjoyed chatting with you, and hope you have an awesome rest of your day.
Likewise, thank you so much.
Thank you. Okay, it is